So I posted this morning the crypto rally, the clarity bump, and I told you what the institutional desks were actually watching, the bond market. That was a few hours ago, and I had to come back and record this one because the bond market didn't just sit there. It went off. If you took anything bullish this morning, I need you to see what's happened since. The risk just got a lot louder. Rewind to July 14th. Soft CPI drops, the 2 year dives. Everyone calls it the all clear. That relief is now completely erased. The 2 year is back up. The front end is pricing tightening right back into the curve. 1 month of falling gasoline didn't change the path, and the market figured that out. With oil pushing higher, the inflation the CPI cooled is already coming back. But the front end isn't the story. The long end is. The 30-year at 5.13, new highs, is not about the next rate decision. It's about who funds a deficit running $39 billion a week. On the softest inflation in years, the long-duration buyers still didn't show up, and now they're demanding more. The short end trades the Fed, the long end trades the deficit, and the deficit isn't negotiating. Now go global, because this is where it gets dangerous. The yen at 163 is a fresh cycle low, and that's the carry trade at its most stretched all year. Borrow yen cheap, buy higher yielding assets abroad. The bigger that trade gets, the more violent the unwind when it snaps. With Japanese inflation hot, that no hike expectation looks fragile. A surprise would be the single most violent market event of the year. Here's why what's coming next week matters more than any data print. July 28th. Warsh's Fed meets, trying to establish a no forward guidance regime with the 30-year at its highs and the yen breaking down. The bond market is forcing his hand before he even sits down. Then July 30th, the BOJ, two central banks, 172-hour window. That's the highest risk window of the year, and it starts Monday. The soft CPI was the head fake. The reversal is the signal. Watch the 30-year toward 5.25, watch the yen past 163.50, and watch whether Warsh can hold the line with the bond market screaming in his ear. The bond market is the adult in the room. Right now, it's not whispering. I'll break down both meetings as they land.